To pay attention to the amount of technology or design we actually use in any technology products we have, like our phones or our cars. And I think that sets up the next and the final panel, because last year where the big discussion here at DAW London was, look at what the sell side's doing, moving from POC to production, 2 sets of rails, no retail stable coins, focus on liquidity, collateralization use cases were emerging. Nobody was really paying attention to buy side. The message was we need to get the buy side interested in this stuff. And then out of the blocks with the SEC approval of the ETPs in February, BlackRock ended up with the largest or fastest growing ETF in history with the BTC ETP. And that surprised them. I mean, if you speak to Tony Ashcroft or any of the team, they just didn't expect that level of success. And of course, we've got 10 ETP holders. So we're on the last panel. You folks are fantastic. This is the third of the last leg. And this is my favorite title today. And so, if you're a trader, you just want to trade. You don't care about the technology. I think this sums it up right. Buy side buys assets, not technology. So can I ask Melina Kohlhofer, who will moderate this panel, and the panelists to come up. And Melina's my new best friend because we ran this hybrid tokenization forum in New York 2 weeks ago. And without her indispensable help, I don't think it would have been as successful. So thank you, Melina, and welcome to the stage.
All right. Thank you, everyone. And this is the last panel, so we'll try to keep it on time so we can all go for drinks soon. But before we get started, why don't we do a round of introductions, and I'll start. My name is Milena Kohlhofer. I lead sales and partnerships for Onera. Onera is an interoperability blockchain fintech, and we work with regulated financial institutions in the tokenization space, and we connect the key participants to each other via routers. And I'm sure you've heard a lot about it today, but if you want to learn more, please reach out to me. Itai, why don't you go ahead and introduce yourself?
Sure. I did a panel earlier, so I'll keep the intro very short. So I'm Itai. I'm the CEO and founder of TomNext. And what we are is a distribution platform for tokenized assets with a particular focus on tokenized alternative assets. So we serve the buy-side community in actually transacting.
Great, Nisha.
Hi, everyone. Nisha again from Citi, and I lead our work around emerging solutions in Citi digital assets. I've self-selected private markets as my area of focus, so lots to share there. And thank you.
Hey everyone, I'm Will Peck, Head of Digital Assets at WisdomTree. This is my first panel of the day. So we're a $110 billion asset manager and ETF sponsor with a significant effort in tokenization and digital assets.
Thank you all. So here we have the buy side, the sell side, and technology platform. So I think we'll get a little bit into each one. But let's start with the sell side. Nisha, can you tell us about the private markets project that you're working on? What are you guys looking at in the tokenization space? And how will this bring value to your institutional clients?
Yeah, so I started out with the technology looking for a problem and soon flipped from that to the problem space looking for whatever is the right solution. So private markets more broadly, I think there's like 3 baskets of challenges we have today. The first is around access and investor user experience, like either most products are not accessible widely, and that's an ask from the buy side to solve more broadly. But even where there is access, it's very, very hard today to do like the 100-page, 50-page manual paperwork and get access to those products. So that's the first one. The second problem is around title transfer. Like there's no easy way to transfer ownership of private assets like private equity funds or private shares. And this, therefore, does not enable usability of these assets for other use cases like collateral or even being able to realize some exit liquidity without having to hold them necessarily till the end of that asset's life cycle. So that's number 2. And number 3 is sort of referred from the second, but it's more important from the asset issuer side, which is around control at the point of transfer. Like, these assets today are not designed to be or regulated to be widely accessible, so there's always some level of gatekeeping in terms of what kind of criteria do the investors need to comply with, and how do you actually build this into the product, and there's no easy way to deliver it with today's technology. So if you look at these three problem statements, then we sort of figured like we need a better digital workflows all around this ecosystem. And for some parts of the solution, the DLT might actually be the best place to record these assets, especially as you look to solve 2 and 3. I think DLT does a bad job with 1 in terms of user experience, but I think for 2 and 3, it actually is the best fit. So trying to bring all of these different technologies together and build an end-to-end value prop that works for private markets, that's sort of our focus.
Amazing. Will or Itai, anything to add to that? I know you have experience on the sell side, so.
Yeah, I mean, I think that there's a big distinction, and maybe, Will, you can touch on this too, between publics and privates.
Yeah.
Right, so, and part of the analogy that I always use in my own mind around technology, infrastructure, and distribution is, I remember when, like, you would go on Ameritrade or Schwab or Fidelity or whatever, and there were only stocks. And then all of a sudden, there was bonds. Right? And what was the technology that made that happen? It was standardization, QSIPs and ISINs, multi-dealer quotes so that they could stream prices for all of this fixed income. And then today you can go on these platforms, type in a QSIP, you can get a competitive price for any public fixed income asset. And that's kind of where public markets are today. But then, Nisha was talking about privates and alternatives, and that's what really, this is like so analog. We're starting even at a level below what I just described for public fixed income. And a lot of what's happening is solving for the standardization, the access, because again, privates are not, by law, available to everyone. And there's nothing that blockchain easily does to solve that, nor I think should it solve that. You have to be an accredited or qualified or elective professional investor. So all that is permissioning, and guess what? Blockchain is great at permissioning. So I think at the infrastructure layer, solving the privates problem is really compelling, and we're working on that too.
Great, thanks. And Will, from a buy-side perspective, tell us about what you're seeing in the tokenization space. Talk to us about your platform, WisdomTree Prime. What are the clients looking for? Do they really care about the technology and understanding it, or are they more interested in the assets that you're putting out there? Tell us more about that.
Yeah, I mean, I think the session title's kind of a leading answer. Clients want better after-fee, after-tax returns, right? Like, that's, at the end of the day, what they want, generally in a more convenient wrapper. So WisdomTree, today the world's largest independent ETF sponsor, one of the world's kind of leading independent ETF firms, right? When WisdomTree launched in its current form about 20 years ago, it wasn't so obvious that ETFs were going to be the dominant way that many people would access, capital markets or invest their assets, right? Mutual funds were the vast majority of assets at the time. Today, there's something like, at the time when WisdomTree launched its first ETFs, there was something like $600 billion in the asset class, or in the wrapper worldwide. Today, north of 10 trillion, right? So a lot of us take that for granted today. Was not always so obvious. And I think the reason for ETF success, right, was that it was both better, performance by generally low-cost, index investments in a more convenient wrapper, right? One that provided intraday liquidity, better tax efficiency, better standardization, more transparency. So when WisdomTree embarked on our digital assets tokenization journey, about 4 or 5 years ago, it was with that same premise, right? It was asking ourselves the question, what could do to ETFs, what ETFs did to mutual funds? And without kind of knowing perfectly how and kind of consistently coming to a better understanding of it, we thought it was tokenization of real-world assets, right? Potential for greater liquidity, potential for greater transparency, greater standardization. Some of that still needs to be proven out, and that's what we're working on at WisdomTree, both with the products that we're building, kind of, the tokens we're issuing, also the distribution channels we have, being WisdomTree Prime for retail and WisdomTree Connect for institutions and other self-hosted wallets. And that's what we're working on, and generally from the liquid side only. So we represent public markets in what we do today.
Great, thanks. And Itai, I'm really excited about the platform you're building, Tom Next. Can you tell us about what other technologies you're implementing at Tom Next? I know you're including AI too, so can you talk a little bit about that and what value that's bringing to your clients and how they manage their portfolios?
Sure, and we'll, without sort of disclosing too much IP, we'll keep it at a reasonable
Yes,
high
of
level.
course.
But the problem we're trying to solve in the alternative space is, we kind of cite it as three staged problems. The first is a problem in sourcing, right? So if you are a huge sovereign wealth fund, if you're GIC, if you're Norges, you don't have a problem in sourcing. Right? You see everything you want to see in the private space. If you're a family office in continental Europe or an RIA in the United States and you want to engage more in alternative, you actually have a sourcing problem. You're seeing a tiny fraction of what is investable for you and what issuers might want to access to sell you. And I like to say, the technology we're disrupting in the sourcing of alternatives is golf. We just think it's nonsensical, the idea that alternative assets are hand-sold by expensive people that are just relationship-driven and not data-driven. So we start by bringing data-driven technology to say, show me the universe of assets that might be out there. I might not have all the deal collateral. I might not know everything about it, but I might know enough to say I might be interested. Can you let me into the deal room? I have a reasonable check that if it's interesting, my clients might want. So that's one piece. The second thing that, once you source an asset, right? So I play golf with a friend. He says, take a look at this private credit fund. They send me the deal collateral or the pitch deck. Let's admit, everyone should read the prospectus. But please, big disclaimer, read the prospectus. Nobody reads the prospectus. People want to know the TLDR. They want to know, what is this asset about? What are the fees? Who are the managers? Is this suitable? What's the liquidity profile? Give me the basics. And generative AI is amazing at helping to do that. So we add that to the platform. So we help with sourcing, right? Then we help with what we call diligence or understanding. And then execution is blockchain driven. Execution is to try to get to digital by design. And so we bring these kinds of things together. These are just modern technologies that we think revolutionize the experience of anything. It's not just investment products. When we go on Google today, you do a Google search, AI results come first. This to me is going to become everywhere, and we want to be ahead of that wave. So we bring that to bear too.
That's amazing. How about City or Wisdom Tree? Any other thing you want to share apart from blockchain that you guys are seeing or implementing?
I think more broadly, just getting the data rails right? Like as Itai mentioned, this is such an analog ecosystem, and blockchain by itself can't do much if you don't. If your NAVs are calculated once a quarter, and what are you going to do putting that asset on the blockchain if? Yeah, it can trade, but it's going to be so divergent from the underlying manager set now, it's sort of like a fake price. So to actually work with the issuers and figure out how can we actually modernize the entire infrastructure. Someone told me that it is in this asset class that you even get lots of phone calls to do stuff and not just emails and Excels and obviously lots of faxes. So getting the entire surrounding supporting infrastructure upgraded, I think that's a primary thing to even enable the technology of DLT itself to unlock some of the values. So we see a lot of work there. And as Ita mentioned, Gen AI to actually help with simplifying documentation, to be able to digitally generate documents, right? Not necessarily start from a 100-page PDF and try to make that better, but actually start from first principles in terms of what are the representations and warranties you want to capture, and what data do you already have on file, what's the timestamp, and how do you actually incorporate that into a more digitally represented document and get that sign off. So things like that is where we see value.
Yeah, and talking about setting up the infrastructure, I want to touch on interoperability. How important is interoperability as you guys are planning your platforms and infrastructure? How do you see this as part of your strategy? Is it a priority? Is it an afterthought? Will, we'll start with you.
I mean, I think it's kind of funny because I think of blockchain as, shared set of infrastructure, right, that kind of everyone can join, can get consistent data from, interact with, and then we seem to have, not that far into this journey, have 10 different platforms with 10 different protocols. It just does not talk to each other at all, which is, I guess, remarkable, but also expected. Look, as our approach to it, we're not trying to pick winners and losers, right? It's not our business to say, oh, this blockchain is going to be best for this sort of thing or whatever it is. Trying to issue assets on multiple chains and multiple venues, meet the clients where they are. That's how we view our role. I think there's lots of providers here like Ornera and others who are figuring out some of those interoperability problems. And it'd be good to get beyond that because we're not a big enough industry yet where there should be like 10 different systems, right? I think we do need to be on kind of one consistent ledger in order to get some of the benefits of this technology.
Yeah. Nisha?
I would echo what Will said, like we're not here to pick winners and losers. We think that's probably a good fit for different technologies, different operating models, different levels of permissioning and openness to exist in the ecosystem. It's about building in a way that can quickly scale across the multiple infrastructure, and I think you guys are doing a great job with the interoperability offering there. But for us, we even have a more fundamental problem, like interoperability between our traditional systems and ledgers and to this whole new digital technology, right? That whole like queuing interface in between probably a slow-moving system and a fast-moving system. And like to be able to even standardize data, to be able to use like protocols like Swift, which our systems today learn and understand, and sort of minimize the friction at the interface between both not just digital and digital, but also between traditional and digital.
Yeah, totally. And we're actually working on a project, which is a fix protocol interoperability with FinP2P. So we're connecting the traditional messaging protocol with a digital asset protocol, FinP2P, which are both open source. And I agree. I mean, we have to solve that too, and that's what we're working on. And you should expect a white paper being released sometime in November. But yeah, not to drift. Itai, what do you think about interoperability? Is it a priority?
I think it's like a sine qua non. Like, the reality is we're not talking about tokenized monkey pictures. We're talking about high-value financial assets. It means a lot. These are people's savings, their investments, their wealth, right? And in the regulated and traditional financial system, we have disparate players. And I just, kind of to Scott's point on the earlier panel, this is not all going to become like decentralized everything, right? Players play different roles in the financial ecosystem and in the life cycle of an asset, and those players are going to be, are going to continue to be on fragmented, infrastructure. And so if they can't communicate with each other, if my client can't go and buy an asset that Nisha issues that's going to be custodied on a different digital asset custodial platform, right, and then accounted for, and then wants to buy one of Bill's assets, it's not going to work, right? The user experience completely falls down, and the value of all of this becomes very, very limited. And so to me, like the ability for the diverse players in the ecosystem to sort of communicate on a single standard of interoperability, recognizing that the actual ledgers themselves are disparate. We're already in a space where we have dozens and dozens of blockchains. We have dozens and dozens of tokenization providers. More are coming. It's going to stay fragmented. Like, there is no one ring to rule them all that's coming. So it's a must. Without it, like, this won't scale.
Totally. And apart from interoperability, which we've already solved, what do you see is the biggest challenge while we're moving towards adoption? Yeah, if you can touch on that.
Want me to go first?
Yes.
User experience. To me, like, you can tokenize an asset. Pretty much any asset can go on-chain. You can use different solutions depending on where you are from a jurisdictional perspective, from an infrastructure perspective, the kind of asset. Okay, so I call that the origination layer, and we're there. Okay, more's coming. We can do better. There's more regulation needed to create more and more scalability and to cover more use cases, but we're well on our way there in the origination layer, right? And then the market infrastructure layer, there's, again, lots happening, whether it's the blockchains themselves, the regulated FMIs, all these kinds of things, digital asset custody, transfer agency, et cetera, also very well on their way. But if the user experience is like it is today, right, which is that I need to know a lot about blockchain in order to interact with any of this. I need to go to like 5 different players and coordinate manually. I need to go to 50 different websites. It's not going to work. And so we have to like redouble our efforts to make the user experience for the 99% of people who don't want to understand anything about the infrastructure, frankly, of any technology they use, whether it's an iPhone or, blockchain-based financial system, to create great user experience. I mean, the whole point of blockchain people like ourselves who have been in this for a long time is to try to create better financial services. And to me, like, the user experience in this space still leaves a lot to be desired. So I'm really passionate to work on that and to try to deliver a great user experience.
I'm so excited to see when you guys release Tom next. Nisha, how about you? What are your thoughts?
So if I went to a private bank today and said, like, hey, do you want to work with us on a tokenized fund project? They'll be like, none of our clients are asking for tokenized funds, right? Like, that's literally what I hear. And so I would also say user experience, but I would go at it from a different angle. So user experience, not as applied to blockchain, but today's user experience is applied to private market assets, and see, like, what's not working from an investor's perspective, and how can we show a better, improved version to deliver these assets to the investors, and don't care about what technology I use underneath. It's likely that we might use blockchain for where it's a good fit, but we probably don't even need a blockchain to get started on the journey. But to actually put the question on, how can I deliver a better user experience for the asset class, and which technologies do I need to string together end to end to make this work? Like, I've learned through hard knocks that that's a better way to approach this question.
And Will?
I guess how I think about it is, I think there is a product market fit you're seeing today for people who are already kind of crypto converted, whether they're retail or institutional, judge them however you want, but things like DAOs, foundations, kind of institutions that exist on chain, I think have a clear demonstrated desire for traditional assets. I mean, you could look at stable coins as the first example of that, right? That found clear market fit with the crypto community. So I think that is a product market fit that you're seeing that's going to continue to grow and be borne out over time. I think in terms of replatforming kind of existing financial services processes on chain, I think that's where a lot of user experience, and going back to the thing that I said at the front, like, what clients want is better after fee, after tax returns in a better, more convenient way, right? Until this industry is delivering that in terms of replatforming, I don't think anything's going nowhere, because you talk to any investor or financial advisor, and they're just like, I don't care if it's tokenized, right? It literally does not matter. So that's what I think needs to be borne out over time.
Great. We do have a few minutes left. If anybody in the audience has a question. Nope, I don't see any hands. Okay, well, thank you so much to the panelists. This has been great, and thank you everyone for staying.
Thank you.
Thank you.
Thank you.
My God, it's a panel that finishes on time. You win. You win the prize. Yeah. Right. So we've got brokerage, custody, and settlement sorted, all on distributed ledger technology. We've got the digital cash leg sorted, and we've got digital assets, and so we can do everything. We can achieve all of the things that we've achieved today. We get the benefit of the network, we get the cost compression, we get the liquidity, all of the collateralization freaks, and we got a super optimized, capitally efficient world. So the question I need to leave you with, and you can come and bother me over a drink, is we surely then must have an oversupply of services, possibly not capital. So does banking, does financial services have its Kodak moment when we get to mass adoption of this technology? I'd like to thank Mike, who will come up and give us a few instructions about what's going on tonight, the Juliet Media team. Julia, this has been a fantastic day, and it's always a pleasure to chair this, Mike. Thanks as well for accommodating Greg, who's here from Australia. Really appreciate it. Certainly I'd like to thank all of our panelists and speakers. This is the state of the art. If you're in capital markets in London and New York, certainly, this is where it's all going on. And I know you appreciate that, but I hope you enjoyed it. And thank you to all of you for being so patient today and getting through this agenda. We got another big day tomorrow. Michael, get you on, but thank you.
Well, thank you very much, Lawrence. I really appreciate our long-standing relationship, working in this industry and trying to, with the same objective, to grow it. Thank you all for lasting to the end of today, and there are drinks downstairs, so I hope you can all get down there and love to talk to you. And for those that are coming to the dinner tonight, it's back up here, heading up around 6:30. So yeah, look forward to seeing you all tomorrow morning as well. Thank you.